Today, we're going to be taking a look at Disney and why it is having such a sharp decline in its stock price. So, on the month, Disney is down 11%. On the day, they are down 3.60%. And year to date, Disney is right back down to where we started the year, barely over $90. Today's range, as of the time that I'm recording this video, Disney has been between 89, 83, and 91.69. So, what does this mean for investors? Before we get into what is going on with Disney, take a minute to like, subscribe. Make sure after you watch this video or during this video, take a second to comment. Let me know your thoughts on what is going on. Do you hold this in your portfolio? Hit the notification bell so that you'll be updated when I put out new content, and check out my referral links. They'll be pinned in the description and in the comments, and consider becoming a channel member. So Disney has been a staple in the entertainment industry for decades. It's something that we all know. I think most of us love, and they have had recent, as I just shared, significant declines in their stock price. You might be wondering, how could this happen to such a powerful brand? Why are they struggling? Let's look at a few key points that have led to Disney stock trading below $100. Declining park attendance. The theme parks have been a major source of revenue. However, according to recent reports, park attendance has been dwindling. Since COVID-19, there has been a massive impact on tourism. And even though the parks have been open now, the numbers have not bounced back to where they were, back to pre-pandemic levels. I'm sure the economy and having to tighten up our budgets is also an impact on that situation. Now, when it comes to Disney streaming services, Disney Plus had a strong start, but they've been faced with steep competition from Netflix, Amazon Prime, HBO Max. They're finding it challenging to maintain their subscriber growth against those competitors. And this is raising concerns about Disney Plus having the ability to keep their streaming services profitable in the long run. Another issue that Disney is having is that analysts are discussing the death cross. That is Disney's stock chart, a technical analysis term that indicates a potential downturn when it comes to their stock. So, the potential of the stock price not improving, which it has not throughout this year so far at all. We're back to, as I just shared at the beginning of the video, we are right back to where we started at the beginning of the year. The stock price has not improved. I'm down over 20% in my position, but I'll get further into that. Just overall, the market sentiment, some investors are just deciding to go ahead and sell their shares, and that is another factor that is driving down the price. So, if you already own Disney stock, as I do, seeing the decline might be concerning. However, it's important to understand that all stocks go through these ups and downs, and the key is to focus on the long-term potential of the company. Disney still has a lot going on for it. Their name is known worldwide. Their brand is incredibly strong. They have a diversified revenue stream between their theme parks and movies, merchandise, and the streaming services. So hopefully, in time, these segments will get back to thriving, and they're not having to depend on just one stream of revenue. Let's hope that the last couple of years of a decline is just a temporary setback. And if you are interested in adding Disney, you could see this as a potential buying opportunity if you believe in Disney's long-term growth potential. If you are considering to adding Disney for the first time or adding to your position, make sure to do your research and make a clear decision on how big you want this to be in your portfolio and if Disney is in line with your investment goals. So let's take a look. Let me share a little bit about My Disney position specifically, I have it in my portfolio over on Webull. It makes up 2.73% of my portfolio. I am currently down 23%. And last year in November and back in May of 2023, I did take advantage of adding a little bit to my position when the stock price was in the 80s, adding any more to my position, but I'm going to be holding for the long term on this particular investment. It can get discouraging when you see your investments decline. Ideally, you don't want to see anything red in your portfolio, but you have to remember that investing is a marathon, not a sprint. The market has highs and lows. And right now, I'm going to just continue to stay informed, be patient, and focus on my long term goals. And I'm okay with my choice to have Disney in my portfolio. I am glad that it is not a large position. I would hate to be going through this with one of my larger positions and have to wait who knows how long for it to recover. But that is not what is occurring because my larger positions are going to be into my ETFs, the VTI or VU, as well as my individual stocks that have the largest positions right now are Apple, Google, Tesla, and Meta, for example. So, another thing I saw in the news is that Disney shares could be trading lower, possibly on sympathy with Comcast, which reported a decline in content and experiences revenue. So it seems that the streaming services is definitely an area where Disney needs to step it up against competitors like Netflix that put out those unique series and movies that people seem to be gravitating to more. Hope you enjoyed this video and that you found it helpful. Make sure to comment. Let me know. What are your thoughts on Disney stock? Do you think that it will bounce back? Are you currently holding it in your portfolio? Did you cut it out of your portfolio because you just didn't want to wait any longer? As I said, I am not considering buying more. Are you? Especially if it does pull back again further into the 80s. Don't forget to hit the notification bell. I'll be coming to you with an update on Tesla and Google's earnings results. So I'll see you in that next video. Thanks for watching. Okay, bye.